folks, Dan Frio here, the Mortgage Update. Today is February 19th. Let's get at it. So today you see the market +2. That's basically kind of where I said we would probably be, and I'll show you that in a second. But I thought the day was going to be a lot more devastating than it was. So let me go through probably the best way to see what's going on in the market. Let's go watch what I see on a daily basis, and then we'll kind of dig into the numbers a little more in detail. But this might even take us down that direction. So this morning we started out the day, the market's opened. All right, then we got housing starts, which was, and I think we go to the next stage right here. Nope, this one here. Housing starts or permits were up, I think it was like a 13-year high. They were up 9% year over year on permits. That's phenomenal, a phenomenal trend. People were taking advantage of the good economy, low interest rates. They're sick and tired of renting, paying off somebody else's mortgage. Somebody owns that building. Okay, somebody owns the building. So you might say, you know what, I just want to rent. Well, then rent. But it's a good investment because somebody owns the building, so you're either going to pay your mortgage, or you're going to pay somebody else's mortgage. So that's basically what it drops down to. So if you're looking to buy, let me know. I'd love to help, and I can help most of the country right now. So then we go to the next thing. This is the shock that I had this morning. You watch me every day, and what I say, there's a lot of things we're watching. It's the manufacturing index, the producer price index for inflation, the case freight index, and I'm going to talk about that a little bit down here. Employment, unemployment, what's going on in the economy. Right now, the coronavirus is throwing a big monkey wrench into everything. So one of the biggest components is the producer price index. That measures inflation. Are we kind of stagnant? Is it hot? Is it cold? Meaning, what's the prices of goods and services doing? Well, they went really high, and they're running real hot right now. The concern there is if they start running too hot, that could prompt the Fed to start raising rates. But there's so much other bad news in the equation right now, and I'm going to show you that in a minute, that I don't really think the Fed's going to do anything, and we're going to come to that in a second with some of the notes that came out of the Federal Reserve meeting from last month. So you'll see here the producer price index was running hot, okay? So that's one of the gauges that we follow. The stock market, we won't go over what happened in stocks today. I'll go over that in a different segment. Let's get here. Midday stocks were up 156. The federal minutes, they basically said they're going to keep an eye on the economy. If need be, they could come in and step in and possibly do something because the coronavirus is playing havoc in the markets. But right now, they're just going to sit on the sidelines. Then the stock market, basically ended. So let's go over to the technicals and really dig down into the details. So the market was up 115 points. I'm going to put my cheaters on. I'm old. The Federal Reserve minutes came in, and they basically didn't really tell us any news that we didn't know. Okay? So then we got the case freight index. This is the shipments of goods throughout the country. It was down 9%. So the case freight index is something that I follow. And I've been following it for years and years and years, and it's a pretty good determinant of what's going to happen 6 to 8 months out. Well, this is on basically, I think we're about a year now that every month after month after month after month, the freight index is going down. That's bad news because that means goods are not shipping as much, meaning people aren't buying as much. That's the only reason that would happen. All right, so that number came in really bad. I thought that was going to play havoc on the market. And then we had the producer price index came out and said the market's running hot. I'm thinking, man, the stock market's going to crumble. It didn't. So that's good news there. And you can see the 30-year mortgage rates, they were basically flat. They said the average 30-year rate increased to 3. It didn't today. It's basically, this number is kind of a lagging number. And you'd be really hard pressed to find that exact rate where they say the average 30-year rate increased to 377 from 372. You got to check this on a daily basis. What's going on there? Housing starts. You can see that the housing starts were construction on new homes were down 3.6, but permits. Where are we getting down here? Where are we? It's maybe on another page. Here it is. Permits. Permits. We're up 9.2% to a 13-year high. So construction starts, there could be a wide range of reasons why construction starts were slow. It could be weather, especially in the South where you have a lot of floods and a lot of just terrible weather. Here in the Midwest, we've been getting pounded with snow and cold and everything else. So that kind of hinders some building. But follow the permits. The permits are smoking right now. So there's a lot of building, in the works, put it that way. Producer price index, we went over that. It was hotter than expected. The core, when you strip out food and energy, which they do a lot of times because those can be really volatile, went from 1.1 to 1.7. That's a pretty hot number, so we're going to continue to watch that. Tomorrow we're going to get the jobless claims and the Philly Fed manufacturing surveys. I don't think there's going to be a surprise here, but some of this stuff up here was kind of a surprise to me. I didn't really think that the Cass freight index was going to be this bad, and I really thought inflation was going to be tapered. And those are two numbers that represent not good news. So again, I thought the market was going to move in a direction, a pretty bad direction. What's coming out tomorrow? We got the China rate decision. That, if you watched yesterday, that could play a big impact on us because the world usually follows one of the big economic powers in the world. When they do things, usually the rest of the world somewhat follows. Not all the time, but a lot of times they do follow. And then you're going to have a couple things here and on Friday. I don't think that's really going to move the markets. You come over here, sharp increase in January housing permits defied predictions. They didn't think the markets was going to be that hot on building of new construction. So that kind of was really good news. And then you see here, this is where, the Fed now sees that the coronavirus can play a bigger, hiccup in the markets than predicted. So if we go back to the Fed minutes, and if you go through, I think they're right in here, the Fed they will also closely monitor the risk posed by the coronavirus. So if they see the world starting to crash, especially the U.S. economy starting to crash because of this, they can step in and do something. But again, with the heated up producer price index, meaning inflation, because that's heating up, I think they're going to, even if some things really kind of turn not too good here, I don't really think they're going to move, especially in the next few months. So if you're looking to do something now, I would pull the trigger now versus waiting. Because I don't really think we're going to see much more of a pullback in the markets. So let's dig down in the markets, some charts that we went over, especially yesterday, and then I'll go over this with kind of let's go over for the beginners. So if you usually watch me, skip about a minute because I'm going to explain to the newbies out there what this number is and what these charts are that we follow. So my name is Dan Frio. I do the mortgage update every day, or I try to do it every day on YouTube. I do it every day on radio. I'm in Chicago. I'm on WYLL radio in Chicago from 7:30 to 8 p.m. Monday through Friday. You can hear me on WIND radio on Saturday mornings from 7 to 8 a.m. Central Standard Time. I'm a mortgage advisor. I can basically help about 3/4 of the country now. We're growing and growing and growing and getting more licenses, so I can help out most of the country at this point. And I do mortgages. I can help you with refinances, renovation loans. If you're looking to purchase a house, we do bridge loans, we do reverse loans, FHA, VA, USDA, every possible basically mortgage product you can think of, I should have. We do bank statement loans. We help foreign nationals. We do a whole slew of things. So if you're in need, if you have good credit and you want to refinance or buy a house, the worst thing I can say is, I just can't help you, but I'll try to put you on the right direction. What we've been really successful in lately is I've been asking a lot of people, if you're in the middle of refinancing or buying a house now, and you have a loan estimate for another company, please email it to me. Email it to me. The worst case in that scenario that'll happen is I'll say, God bless you. You got the best rate there is. Don't do anything. Go with that company. But in most cases, probably 75% or 80% of the cases, we're either going to save you probably a couple $1,000, or we're going to save you a couple $1,000 and get you a lower rate. So reach out to me. I'd love to help. The best way to get me is 844-775-LOAN. That's 844-775-5626. Or you can reach me. Email is Danny, DANNY, .Frio, which is FRIO, at preferredrate.com. Check me out on the web at thefrioteam.com, thefrioteam.com. And again, Frio is FRIO. And also, if you want to find out who I am, just Google me. Google the Mortgage Update with Dan Frio. You should see about 5, 6, 7, 8 pages of Google about me, websites, podcasts, YouTubes, radio shows, radio events, Google reviews, Zillow reviews, everything you can about me. So let's get on to this part. What we follow here is this number right here. This is the instrument or the tool or the mechanism that creates mortgage rates. This is what we call the mortgage-backed securities market. It's a bond of mortgages that determine mortgage rates. Okay, this number is the price of a bond that trades this. As the price goes up, if you pay more for a bond, that means you're getting less of a yield. That means the rate's lower. The mortgage rate's lower. We love to see this go up. So if you followed yesterday's channel or go back to yesterday's, I said we're probably going to end up right about in this area here. So let's dissect this. What's going to happen in the next couple days, weeks, months? Hard to say. But let's put some technical numbers in here. I'm going to kind of go into this level area here, and I'm going to put this in here. So where should we be trading? Well, in the short term, we're probably going to be bouncing around in this area here. But long term, we probably shouldn't exceed this, nor drop below this. These two lines here are what we call the Fibonacci levels. So anybody that took economics, you know the Fibonacci levels are basically bumpers that charts or products or stock prices or bond prices, they trade between. And basically these are technical numbers that we as chartists, I guess I'll say it that way, is we follow. So if the market's pretty stable and there's nothing really throwing huge curveballs in this situation, we should trade in this area here. So we should be trading in the next couple weeks or so right in this range. Long term, again, if you follow some of my channels or most of my channels, I always say pigs get fat, hogs get slaughtered. This is a huge run in the business. This probably equated out to at least 0.5 to 0.75% lower in mortgage rates. And that's only going back to November. Let's go back to here and let's look at a 1-year chart. Look at this. Look at this. We started down here. Look at this trend line. I mean, that's nuts. That's like the Dow going up 10,000 points. So at some point it's going to kind of, I hate to peter out and going to change courses. But I don't really think, look at this range we're trading in. And lately we've been trading right into here. So I don't really think there's going to be major changes here shortly. If anything, with the coronavirus, the case freight index and some other stuff, rates could drop. But if inflation starts to creep up on us, the worst between the two, they're battling back and forth. Between the two, we should just stay stable. So one's saying raise rates, one's saying lowers rates. So both of them are pretty strong determinants. So I see rates just stand steady for the time being, which is good. So basically the tough things is when you have these huge moves in the market. So that's it for today. I will be recording a lot of radio shows tomorrow. I will post if there is an alert. So I hope you like the videos. If you do, please don't forget to give me a thumbs up. Please click down below and subscribe. Leave a comment. I answer every comment that you make. You can comment down below if it's something personal. You might want to email me again at danny.frio@preferredrate.com. Check out my website, thefrioteam.com. I'd love to help. So look forward to hearing from you. God bless. God willing, I'll see you again tomorrow. Same time, same place. See you then.